right now, there's this multi-billion-dollar industry where, demand is just skyrocketing. Phones are absolutely ringing off the hook.
Oh, yeah.
And yet somehow the companies doing the actual physical work are facing this, absolute financial and operational squeeze.
It's wild.
It really is. So today we're looking at this massive kind of unseen pressure matrix that's currently reshaping an industry that, let's be honest, you probably don't even think about until you absolutely desperately need it.
Right, until it's an emergency.
Exactly. We're doing a deep dive into the property restoration space. We've got this big stack of industry analysis, market research, and business notes on property restoration and insurance. And our mission today is really to figure out this puzzle.
And it is quite a puzzle.
It is. We want to uncover why an industry with unprecedented demand is somehow operating on razor-thin margins and what the most sophisticated companies are doing to actually survive this gauntlet.
Yeah, that's the real question.
Right. So to set the stage for you listening, as we were reading through these sources, the current state of property restoration, it feels a bit like a restaurant with a line out the door and around the block. But the kitchen is completely on fire.
I love that analogy.
And the health inspector is just hovering right over the chef's shoulder, taking notes the whole time.
Yeah, that visual captures the tension perfectly. I mean, really perfectly. To understand the scale of that line out the door, we have to look at the sheer volume of demand hitting these operators simultaneously.
Which is just massive right now.
Oh, it's staggering. We're seeing this relentless compounding increase in billion-dollar weather events. The data shows, prolonged wildfire seasons, hurricanes that are carrying way more moisture and pushing much further inland.
Right.
And then you have severe convective storms and hail impacting regions that historically they just didn't see them.
Yeah, places that aren't used to that kind of weather.
Exactly. Plus deep freeze events that completely paralyze regional power grids.
Yeah.
All of these things generate massive localized spikes in property damage.
And that is just the catastrophic headline-grabbing volume, right?
Yeah.
The notes emphasize that the micro-level everyday emergencies, those haven't slowed down either.
No, not at all. They've actually accelerated. I mean, you have an aging infrastructure grid across North America, which is leading to routine pipe bursts.
Oh, yeah, constantly.
And you have these increasingly complex commercial buildings where, say, a single sprinkler malfunction on the 10th floor, well, that cascades into a multi-million-dollar commercial water loss.
Right, flooding every floor below it.
Exactly. So you combine those macro-level climate events with the micro-level infrastructure failures, and you have an unrelenting need for rapid professional restoration services.
Yeah.
The total addressable market is just astronomical.
Which brings us to really the core paradox of this deep dive, because basic economics suggests that, overwhelming demand should translate to easy money.
You would think so.
Right. If I'm a restoration operator and my dispatch board is full for the next 6 months, the assumption is that I can name my price, expand my margins, and just operate with a massive cushion. But the analysis shows the exact opposite is happening.
Yeah, it's completely inverted because demand alone, especially in a highly regulated multi-stakeholder environment, it just does not guarantee profitability. In fact, mismanaging that demand will bankrupt a restoration firm incredibly fast.
Really? Just from having too much work?
Yes, because the margin squeeze begins with the entities holding the purse strings,
Right.
which is the insurance carriers. We are witnessing this complete paradigm shift in how carriers evaluate, deploy, and compensate restoration contractors.
Okay, let's pull on that thread a bit, because this is where the health inspector part of the analogy comes in, I think. It seems like the physical act of restoration, ripping out wet drywall or setting up those negative air machines for mold, that's becoming almost secondary to the administrative burden of proving you did it.
Oh, the physical repair is basically table stakes now.
Yeah.
Carriers are managing risk across millions of active policies.
Right.
When a deep freeze hits Texas or a hurricane hits Florida, they are suddenly inundated with tens of thousands of claims in a 48-hour window.
Total chaos.
Complete chaos. And they cannot manually audit every single one. So what do? They shift the burden of proof entirely onto the contractor. They need structured, verifiable data to justify payouts, prevent fraud, and keep their own loss adjustment expenses down.
So just sending over a PDF estimate and a few blurry photos from a smartphone, that just doesn't cut it anymore?
Not even close. I mean, carriers are demanding flawless digital workflows that integrate directly via API right into their own claims management system.
Wow, so they want direct access.
Exactly.
Yeah.
And they want incredibly fast cycle times. That means the time from the first notice of loss to the final estimate has to be extremely short. They require granular, real-time job costing, 3D spatial documentation, and really rigorous compliance programs. If a restoration contractor fails to, say, upload their daily drawing logs into the software platform by a specific cutoff time, the carrier's algorithms flag it.
Just automatically.
Automatically. And then the contractor risks a severe penalty or even non-payment for that portion of the work.
Okay, I have to challenge the business logic here, though, just a little bit. If there's a massive shortage of qualified restoration companies after a catastrophic event, why do the carriers have so much leverage?
That's a great question.
I mean, if a hurricane takes out half the roofs in a county, shouldn't the people with the tarps and the heavy equipment be the ones dictating the terms?
Well, in a localized, really short-term catastrophe, sure, a homeowner might hire whoever shows up first in an unmarked van. But building a sustainable, scalable business model that requires consistent, year-round volume.
Right, you can't just wait for a hurricane.
Exactly. You cannot build a $50 million enterprise solely by chasing storms. You need everyday, reliable revenue, and that revenue flows through preferred partner networks, or PPNs, which are managed by the carriers or third-party administrators.
So it's essentially a gate-kept referral pipeline.
A highly lucrative, heavily guarded pipeline, yeah. The carriers basically dictate the terms. They say, we will guarantee you a high volume of local work, drastically reducing your customer acquisition cost, but only if you adhere strictly to our data standards, our pricing matrices, and our cycle time requirements.
Oh, wow. So they lock you in.
They do. The restoration firms that master this administrative marathon get elevated within the algorithms and receive more work. The ones who push back or whose back office operations just can't handle the data requirements, they get starved out of the network.
Man. And for you listening, this dynamic matters tremendously to your life. When a pipe bursts in your kitchen at 2 in the morning, the speed at which your home is put back together relies entirely on this invisible, high-stakes, bureaucratic dance. If your chosen restoration contractor has their API integrations and data collection completely dialed in, the carrier system approves the estimate automatically and the rebuild starts immediately. But if they don't, your claim just sits in administrative purgatory.
Yeah, the administrative capability of the contractor directly dictates the physical customer experience.
That's crazy to think about.
It is. However, to meet these intense new documentation standards while simultaneously executing really complex physical labor in disaster zones, you need an incredibly sophisticated workforce.
Right. And reading through the labor market analysis in our sources, that workforce simply does not exist in the numbers required right now.
No, it doesn't.
We are looking at a severe structural labor crisis that is squeezing the EBITDA margins of basically every company in the space.
Yeah, the lack of skilled technicians and experienced project managers, it's the single biggest bottleneck capping industry growth. And it is not merely a recruiting issue. I mean, it is a retention and unit economics issue.
Let's break down those unit economics for a second, because the physical reality of the job makes the high turnover make complete sense. I mean, this is not a climate-controlled warehouse job.
Not at all. You are deploying teams into highly compromised environments. They are wading through Category 3 contaminated water, operating heavy extraction equipment in extreme heat without any HVAC.
Oh, man.
They're dealing with hazardous materials, asbestos, lead, soot. And on top of that, the industry operates on a 24/7 emergency response model.
So you're always on call.
Right. Technicians are on call during holidays, weekends, middle of the night. The burnout rate is exceptionally high.
Which naturally leads to wage inflation. If I'm a potential worker, I am looking at the physical and mental toll of property restoration and comparing it to, say, the hourly rate of a last-mile delivery driver or manufacturing tech.
Exactly. Why do the hard job when you can do an easier one for similar pay?
Right. So to attract that labor, restoration firms have to significantly increase base pay and overtime.
And here is where the squeeze really happens. Because they operate within the fixed pricing matrices dictated by the insurance carriers, often standardized software like Xactimate, they cannot easily pass those increased labor costs onto the consumer or the carrier.
Oh, so they're capped.
Yes, the wage inflation eats directly into their operating margins.
So you have carriers demanding more data, a labor pool demanding higher wages, and fixed pricing capping your revenue per job. I mean, the math on that breaks eventually.
It absolutely does.
To bridge that gap, the industry appears to be undergoing a massive pivot. From the notes, the most successful restoration companies are essentially morphing into applied technology companies.
Yeah, it's really the only viable mechanism for survival. If you cannot linearly scale your headcount to match the demand, well, you must exponentially scale the efficiency and output of your existing headcount.
And the mechanisms they're using to do this are just fascinating. We're not just talking about upgrading from pen and paper to iPads here. The sources detail predictive analytics, moisture mapping, autonomous drones, AI-driven documentation.
It's next-level stuff.
Let's dig into how some of these actually work on the ground, like predictive analytics, for instance. How does a restoration company even use that?
So sophisticated firms are integrating advanced weather API data and predictive models to anticipate demand before it even materializes.
Wait, before the storm even hits?
Exactly. Instead of waiting for the phone to ring after a deep freeze paralyzes a city, they're tracking the meteorological data, identifying vulnerable zip codes based on things like housing stock age,
Okay.
and then they're pre-staging semi-trucks full of desiccant dehumidifiers and air movers just outside the strike zone, like 48 hours prior.
Oh, wow. So the moment the thaw happens and the pipes actually burst, they're already deploying while their competitors are still scrambling to rent equipment.
Precisely. And that directly drives down cycle times for the carrier, which keeps everyone happy.
Right. And look at the diagnostic phase. We have moisture mapping and thermal imaging now. I mean, I always pictured water damage assessment as just a guy with a moisture meter poking a wall every few feet.
Yeah, that used to be the standard. But now, technicians utilize thermal imaging cameras, combined with advanced sensor arrays, to instantly visualize temperature differentials behind completely intact drywall.
So they can see the water behind the wall.
Right, they can identify the exact migration path of the water. But more importantly, this technology generates a 3D topographic map of the moisture within the structure.
Which is data for the carrier.
Exactly. It provides the carrier with indisputable structured data proving that the drying metrics have been met. It completely eliminates friction and negotiation on the final invoice.
And the drone and AI integration is equally disruptive, it seems. A technician no longer needs to spend an hour on a steep, potentially compromised roof taking manual photos.
No, it's way too dangerous and slow.
Right, so a drone can execute an autonomous flight path in 10 minutes, utilizing photogrammetry to create a hyper-accurate 3D model. Then, AI algorithms scan that model to identify specific hail hits, automatically calculate the square footage, and populate the materials list directly into the carrier's estimating software.
It's incredible efficiency. But the overarching dynamic to recognize here is that the technology is not replacing the restoration professional.
Because it can't.
Right. Artificial intelligence cannot physically extract sewage from a basement or carry a 100-pound dehumidifier up a flight of stairs.
But it acts as a force multiplier. It strips away all that administrative friction.
Exactly. It empowers the existing scarce workforce to execute significantly faster and with much higher accuracy. It basically transforms a blue-collar technician into a highly leveraged data collector.
That's a great way to put it.
Yeah. The human element, managing the volatile physical environment, and honestly providing empathy to a distressed policyholder, that remains the ultimate competitive advantage. The tech simply makes those humans far more profitable.
And this shift toward perfect AI-generated documentation, it creates an interesting ripple effect. It fundamentally alters the relationship between the restorer and the insurance carrier. If the data is unquestionable, the historical tension should, theoretically, disappear.
Yes, and this touches on one of the most pervasive myths in the industry, the adversary myth.
Let's talk about that.
There is this deep-seated legacy assumption that insurance companies and restoration contractors are locked in a zero-sum conflict. The assumption is that the contractor wants to maximize the invoice and the carrier wants to minimize the payout.
I mean, it's an easy narrative to believe from the outside.
It is, but an analysis of their core operational metrics reveals they actually share identical macro objectives.
Really?
Yeah. Both entities are financially incentivized by speed. The restoration firm wants to complete the mitigation, collect payment, and deploy their limited equipment to the next job.
Right, get in, get out.
And the carrier wants to close the claim rapidly because prolonged claims incur higher loss adjustment expenses and often lead to secondary damage, like mold proliferation, which just spikes the severity of the loss.
And they both live or die by customer retention, too. If the homeowner has a seamless recovery experience, the contractor gets 5-star local reviews, and the carrier retains a policyholder who will likely renew for the next decade.
Exactly. The friction historically stemmed from asymmetric information. When a contractor submitted a handwritten invoice that was literally impossible to audit, the carrier obviously pushed back.
Sure, they want to know what they're paying for.
Right. But by utilizing this new wave of technology to provide transparent, real-time data, the best restoration firms are repositioning themselves as trusted risk mitigation partners rather than adversarial vendors.
That concept of risk mitigation, it leads to a glaring vulnerability highlighted in the research. These restoration companies exist entirely to manage acute risk and disaster for other people, yet they frequently suffer from a massive blind spot regarding their own internal risk management.
Oh, it is a severe vulnerability. The operational tempo of responding to continuous emergencies leaves executive teams with very little bandwidth to audit their own exposure.
They're too busy putting out literal fires.
Exactly. They end up treating their own corporate insurance as a transactional compliance requirement rather than a strategic pillar of business resilience.
And when you actually map out the specific liabilities of a modern restoration company, the exposure is staggering. We are talking about cyber liability, pollution and environmental risks, fleet safety, and really complex workers' compensation profiles.
All at once.
Yeah. Take the technology we just discussed. If a company is using 3D spatial mapping tools to document the interior of a client's home, the cyber liability is massive.
Consider the data they hold. Those 3D scans, they often inadvertently capture personal artifacts, security system layouts, financial documents sitting on a home office desk.
Wow, yeah, I didn't even think about that.
And add to that the personal identifiable information, insurance policy numbers, and bank details stored in their CRM. A targeted ransomware attack or a data breach doesn't just halt their operations, it opens them up to catastrophic third-party liability claims from the policyholders.
Or look at the environmental exposure, because pollution liability isn't just for oil spills, right?
No, not at all.
If a restoration crew improperly contains a mold remediation zone and spores contaminate the HVAC system of an entire commercial building, or if a chemical biocide used for sanitization causes a severe respiratory reaction for the homeowner, the contractor is entirely liable.
And then you add the physical risks of the technicians themselves.
Right, the fleet safety.
You have fleets of heavy extraction trucks being navigated through active disaster zones, often by technicians suffering from severe fatigue after consecutive 14-hour shifts.
It's a recipe for disaster.
It is. The probability of an at-fault commercial auto accident or a severe workers' compensation claim is statistically very high in this industry.
Which means the protectors desperately need protecting. The margins are already so tight that a single uninsured loss or a spike in their workers' comp experience modifier could wipe out a whole year of profitability.
Easily.
The sources point to specialized strategic partners stepping into this void, specifically firms like Magoon Group. And what stands out is that they aren't just brokering insurance policies. They seem to act more like an outsourced chief risk officer.
Yeah, that is the necessary evolution of the broker relationship in this space. A transactional broker simply places coverage, but a strategic partner like Magoon Group conducts deep operational audits to improve the actual insurability of the restoration firm.
Okay, by improving insurability, you mean actively reducing the root cause of the risk, so the company becomes a more attractive profile to underwriters.
Precisely. It involves implementing telematics and rigorous driver training programs to reduce fleet accident frequency. It means auditing their master service agreements with subcontractors to ensure proper risk transfer.
Or making sure everyone's covered.
Right. It involves stress testing their cybersecurity protocols and establishing clear environmental containment standard operating procedures. The goal is to aggressively reduce operational risk at the source, which stabilizes their insurance premiums and protects their balance sheet.
Because if a premier restoration company goes bankrupt due to a cyber breach or a multi-million-dollar fleet lawsuit, they are permanently removed from the board.
And that hurts everyone.
When the next Category 4 hurricane makes landfall, that community has lost a vital piece of its recovery infrastructure.
The stakes extend far beyond the profitability of a single enterprise, which is why the future of the property restoration industry belongs exclusively to the sophisticated operators. We are witnessing the final days of the unstructured, hammer-and-nails contractor dominating this space.
The bar has been permanently raised. The companies that will capture market share over the next decade are the ones transforming into highly sophisticated professional services organizations.
Without a doubt.
They are investing heavily in corporate leadership, institutional-grade financial management, proprietary technology stacks, and proactive risk management partnerships.
They recognize that they are not simply in the business of drying wet buildings. They are in the business of complex logistics, data management, and rapid human intervention.
And for you listening, the overarching takeaway here is how deeply this unseen industry impacts your world. The property restoration sector is the connective tissue between a natural disaster and a community's economic survival.
Yeah, it really is.
They are rescuing small businesses from permanent closure after a fire. They are making flooded neighborhoods habitable again. The speed and efficacy at which your local economy bounces back from the next inevitable weather event rely entirely on the underlying business resilience of these specific companies.
As the frequency and severity of billion-dollar disasters continue to escalate, the societal reliance on this industry will only deepen. The operators who recognize the immense responsibility of that role and build the infrastructure to support it, they will define the future of recovery.
Which leaves us with a fascinating, slightly provocative thought to consider.
Oh, let's hear it.
If the data is correct, and climate volatility guarantees that the demand for disaster recovery will continue to outstrip supply, the fundamental nature of this industry might have to shift. As property restoration becomes increasingly critical to regional stability and national survival, will it eventually evolve past being a fragmented collection of private, for-profit enterprises?
That's a huge question.
Decades from now, will the act of restoring a flooded community become so essential that it has to be treated and perhaps heavily regulated as a public utility? Something to mull over the next time you see a fleet of restoration trucks rolling into a storm zone. They are fighting a margin squeeze on the back end just to keep the front doors open. That's our deep dive for today.